Import-export is just a fantastic business, and this is quite easy to run ideally. Because basically, some individuals, some companies that provide products for which there's a demand somewhere else, and you can broker and make the intermediation. Now, there are different levels of import-export. You can buy stuff and resell it, or you can simply broker it. However, there are a few things you must be aware of before you start your import-export business from Italy. So first of all, you need to understand the taxation. So how do you want to set it up? This will greatly affect your taxation. You can run your import-export as an individual, or you can run that as a company. Now, in that as a company, you have higher accounting costs, but potentially lower tax liability and a lower liability itself. What if the goods you are trading, they have troubles, or they are faulty, or they don't have all the required certification? What if? Well, if you run it personally, you are exposed to higher liabilities, indemnity liabilities, than if you run it through a company. So this is the first thing you need to be aware of. The second thing you need to be aware of is how do customs work. So if you operate within the EU, this is very easy. It's very easy because the EU has greatly reduced the compliance required to operate within. So first of all, you do not levy any duties. Potentially, you levy excises if you trade in certain products, for instance, wine and spirits and tobacco, etc., etc. But there's no problem. So if you sell it to a foreign country, EU-based, sell to Germany, well, no duties. Not too bad. There are some compliance required, which is called the Interstat, where you need to provide information on the sales to a third country, and if you sell it to consumers, you might be required to identify for VAT purposes in the foreign country. But this is a different thing. This only operates if you trade on an e-commerce basis. But if you operate with countries outside of the EU, which is very likely because normally they have a lower cost of manpower and they produce more goods that can be resold into the EU, well, you need to be aware on how the custom duties they work. So what happens with that? Do you need to appoint a fiscal representative? And if you think about it, the United Kingdom, they just exited the EU, they need to appoint someone within the EU to do business there. So you need to appoint someone who can deal with VAT. You need to understand the impact of duties and VAT, who pays for that. And even if VAT is just something which is neutral, because in the end your client pays for that, well, if your client is a business outside of Italy, you don't charge that, but you advance that. And then where do you store your items? So it's very important to have a great business plan in regards to the import-export, because it's very easy to get tricked on a tax side and on a financial side, because potentially you might also have to advance money and you need to insure your goods, and also you need to operate carefully to provide the best margins for that and provide the best market. So the more countries you operate in, and if they fall outside the EU, the more compliance you're required to have and the more your accountant will cost. So you need to make extremely sure that you're doing the right thing and that you set up properly to avoid to incur in any potential unwanted tax and personal liabilities thereafter.